Polkadot, from the Internet of Blockchains to a decentralized supercomputer, a historic tokenomics shift in 2026. Polkadot is currently at a critical crossroads. Following its historic upgrade in March 2026, the project is no longer just a traditional Layer 0. It has evolved into an entirely new economic model. Polkadot is a multi-chain network that enables independent blockchains, parachains, to connect and share security through a central relay chain. It addresses fragmentation in DeFi and Web3 by allowing specialized chains to communicate seamlessly via XCM. Why does it matter? On March 14, 2026, Pi Day, Polkadot officially introduced a hard cap and reduced inflation by more than 50%, ending the era of unlimited token issuance. Supporting catalysts, the launch of the first spot ETF in the US, 21 shares TD Yacht, and the JAM, Join Accumulate Machine protocol are pushing Polkadot closer to the vision of a decentralized supercomputer. 1. Project breakdown. Rebranding or true transformation? Imagine Polkadot as a massive universal power socket. Previously, Polkadot 1.0, if a project wanted to access resources, lease a parachain, it had to participate in auctions and lock up a large amount of capital for 2 years, like renting an entire building just to use one office. With Polkadot 2.0 Agile Coretime, the model shifts to pay-as-you-go. Need computing resources for 1 hour? You only pay for that hour. This significantly lowers the barrier to entry, allowing smaller, less capitalized projects to access Polkadot's shared security. Thus, Polkadot 2.0 is not just a rebranding. It represents a fundamental shift from a chain-centric model to a core-centric one, where computation resources are the primary focus.
JAM architecture.
Replacing the traditional relay chain, JAM enables complex computations beyond simple token transfers to be executed directly at the base layer. Currently in testnet, JAM aims to transform Polkadot into a decentralized supercomputer with powerful parallel processing capabilities, RISC-V support, and greater execution flexibility. Key differentiation: unlike Ethereum's Layer 2 ecosystem, which often suffers from liquidity fragmentation, Polkadot offers unified shared security. However, a major barrier remains: the complexity of substrate compared to the more familiar EVM environment. 2. Team and backers. Team, led by Gavin Wood, Ethereum co-founder and creator of Solidity. Parity Technologies continues to rank among the top 6 globally in core developer activity in 2026. Backers plus Tier 1, Polychain Capital, A16Z, Pantera Capital, plus ecosystem ties. These funds not only hold dope but also invest deeply in ecosystem projects such as Moonbeam and Astar. The listing of the 21 shares T.ETF on Nasdaq signals clear participation from institutional capital. 3. Tokenomics, the numbers game. This is the most critical transformation following Referendum 1710. Current price, $122.135, max supply, 2.1 billion. Newly established. Circulating supply, 1.68 billion. Annual inflation reduced from 10% to 3.11%. Market cap, $2.2 billion. Sell pressure analysis unlocks. Early investor allocations have already been fully released. Current sell pressure mainly comes from staking rewards, now halved, and DOT returned from expired parachain leases. Utility, plus Coretime purchases, DOT is used to buy computational resources. Plus staking, unlock period reduced from 28 days to 24-48 hours, significantly improving liquidity. Burn, a portion of transaction fees and Coretime revenue is burned, moving toward a deflationary model as network usage scales. 4. On-chain data. Despite being labelled a ghost chain, the data suggests otherwise. Approximately 65 active parachains. Total ecosystem TVL, including parachains, $3.5 billion. 5. Smart money perspective and risks. Smart money. Most Tier 1 funds that entered below 30 cents remain in profit, but confidence has been tested compared to the $55 peak. The ETF acts as a potential gateway for new capital inflows from traditional markets. Risks. Bridge security. The Hyperbridge exploit in April 2026, 2.5 million loss on EVM chains, highlights ongoing cross-chain vulnerabilities. Competition, plus Ethereum Layer 2 solutions dominate user adoption due to simplicity. Polkadot remains more appealing to engineers than mainstream users. 6. Conclusion and scoring. Technology, 95, leader in forkless upgrades. Team, 90. Gavin Wood is a strong technical guarantee. Tokenomics, 85. Hard cap was a timely move. Adoption, 45. weak end-user traction. Narrative 60, aligned with RWA and AI supercomputing trends. Funding, 85, ETF is a major advantage. Risk, 70, risk of being overlooked by the market. Overall evaluation score, 76-100, category mid-cap, narrative-driven, price heavily influenced by market trends. Suggested strategy, long-term, consider accumulating in the 1.1 to 1.3 range if you believe in the JAM supercomputer vision. Plus, short-term, monitor ETF inflows before making decisions. This analysis is based on publicly available data and is for informational purposes only, not financial advice. Always do your own research. Why all?